Hello investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Before we get into the details of the technical charts here, just want to point out that big news broke today in Washington, where Republicans basically put the kibosh on Donald Trump's tax cut bill. Now, Trump is counting on this to help with this master plan to stimulate the economy. And he was also planning on tariffs making up the difference for the drop in tax revenues. So this has basically put the red light on things here. And the market did not react at all. If you look at the intraday chart on the diamonds, you could see that it just continued trudging away to the upside. Now, I do have an article that's coming out on Zero Hedge later tonight that's talking more about what happened in Washington today with the 5 Republicans rejecting. So I do think that's going to be a big negative for the markets next week when the talking heads over the weekend really address this, especially on Sunday morning. Now, I am not moving those downside targets, and I will show you why. At the end of this video, I'm highlighting the trade of the week to show our viewers how even a bear like me can still make money taking bearish positions in an up market. Now, if you're just going straight short the market, you're going to get crushed. But if you're an option spread trader, stand by, because there are ways to make money even when the prices move against you. So make sure you stay tuned for that at the very end. Now, looking at the diamonds, you can see that we had a drop in volume on the way up right at this resistance point up here. Now, I'll leave that up temporarily because this dotted line down below is my longer term target. I think we're stuck in this range right here as the market oscillates between support and resistance up above. So again, the option traders are having a field day, and I will show you how to spread trade. Now, I'm not going to be able to spend an hour showing you how to do this. I'm just going to give you the quick overview on how we make money. So stay tuned for that, like I said. Now, looking at IWM, it's pretty much going to be the same story right across the board. You have the resistance up here, which is a role reversal. See that support drawn straight across is a resistance area here. So we got the range forming on IWM. Downside target on that is still highlighted down there at 175.81. I'm going to go through these quickly so we have a little bit more time to get into the option trades. QQQ, you're going to see right here, again, resistance right here at the top. I'll leave that in there, so that will be in place for at least a little while. The markets are extremely overextended. We talked about this when we started talking about Bollinger Bands a week ago. And I could even throw the Bollinger Bands up here to give you that idea of where the Qs are. I'll put the Qs back in right here as we look at Bollinger Bands. And you can see that the upper band is being ridden right there with the oscillators showing overbought. And believe it or not, look at the CCI about to cross with a sell signal, believe it or not, as the market was going up. That's what we call a negative divergence. And Bollinger Bands are all about the snapback, right? It's called mean reversion. So we're expecting the price to move back towards the middle of this channel. And so we're very optimistic about the markets moving forward because the volatility, as you will soon see, is still on the low end with gaps above the market. And I talk about that all the time because I give that guarantee that gaps will fill. So downside target still long way off, but still in place at 417.67. Looking at SPY, again, same story, at resistance, oscillators overbought, gaps below the market, downside target 497.97. And here is the VIX. Look at that. We're on a major support level for the VIX right here. And the oscillators are oversold. I do believe the CCI is going to cross with a buy signal next week. And this is the gap that I find most interesting right here. Why is that? Because that is a weekly gap, and there's only maybe 1 or 2 times in the history of the VIX that you have a weekly gap open like that. So we did close this week with that gap still open. So I'm giving you that guarantee that the VIX is going to fill that gap, which means you got a target of around $25 up here And when you look at where the VIX is at 17 or thereabouts, you've got a very big percentage of upside to go before that gap fills. So very exciting for those who trade the VIX. And I'm going to tell you that you can do that through UVXY. Our VIPs traded that with a ratio spread using the options, a bullish ratio spread. That was actually paid for by the premium collected in the market. Maybe next week we'll talk a little bit about how to trade the VIX using options. So again, I'm giving you that guarantee that that open gap is going to fill. Now, ready for it? We got the trade of the week for you highlighted here in the trade blotter for Coinbase, ticker symbol COIN. Now follow me. I'm going to slow it down just a little bit. First and foremost, if you know nothing about options, you have to understand that you could make money on the way up by buying calls. You could make money on the way down by buying puts. The price of puts go up when the general market goes down. So you can play the market from the upside or the downside. But while that would be a directional play, we here and our members through StickyTrades trade a lot of spreads. So what we did starting on January 21st is we bought a put. And we bought a put that expires way out there in January of 2027. You see this? This was January 2027. We bought the 290 puts. And we spent a lot of money for that, $98.30. Now, each option contract carries 100 shares. And that's priced on a per share basis. So that one option costs $9,830. And then immediately what we did is we sold another option to collect money to help pay for it. Now follow me. Even if you're a little confused, just understand the first trade is we bought an asset. The second trade here is we collected money by selling another option. There we go. And that's what started things off. Now, as the stock went down, what we did is we rolled down and took a profit, a big profit, on these puts that we originally bought. You see that? So we bought them at $98.30. We then sold them at $106.60 because the market went down. And then what I did is I rolled into another put that was cheaper. Now, what did we do? We went right back into collecting credits. The original put that we sold here expired, and we bought this one back, buy puts to close, and we sold in April with the same strike, collecting, yes, another credit. Speeding it up just a little bit, each expiration, what happens is we collect these credits. We'll continue to roll down and take big profits on the options that we own. And then what happens is the market bottomed out for Coinbase pretty much recently. And lo and behold, what did they do? This week, they added it to the S&P. Let me just take a quick look and show you the chart here. For Coinbase, once the news came out that they were adding it to the S&P, what happened? The stock gapped up. You see this? Gapped up pretty big. Well, did that shake us up at all? We have a short position, right? Anyone else would have lost money on that big gap up. Well, not for us because we have a plan. Going back to the trade blotter, you can see here what we did. On the 13th, when that news came out, you could see that we rolled the short side up. The put that we had sold or had been short at 210, we rolled it up and collected a big whopping $7 credit. Now, when all is said and done here, and we're not done with this position, by the way, we started off, again, investing $9,830. After all the credits, we have now lowered the cost basis down to $37.10. Again, with a put spread that's bearish while a stock is going up. Well, as of today, the January 230 puts that we are long, you see I color code everything for our members, those are now trading at $57. So we're still up about $20 on those puts. And it's not over, like I said. Next expiration, as we come into June, guess what's going to happen? I'm going to roll those puts for yet another credit. Now, let's put all the confusion aside. And for those that know nothing about options, let me give you this. Imagine for a moment that you could buy a house. Let's say you're going to buy a house and your goal is to rent the house out, right? So you go out there and you go buy a house for $9,800. You think you could even do that? No, that's not reality. You can't even buy a shed to rent out for $9,800. Well, in this case, imagine just for a moment, for this example, you're able to buy a house for $9,800. Do you think you could rent that house out for $1,100 a month on a $9,800 investment in that house? Absolutely not. You could never do that. But that is the analogy I'm using to show you the equivalent. That's actually what we are doing in the option markets. We're buying assets on the cheap, but we're collecting a lot of premium each and every month by selling other options against our asset. And over time, what happens is, and I do believe this is going to happen pretty soon, as we continue to roll the short side, the cost basis gets closer and closer to zero. Once it gets to zero, we now have no risk, absolutely no risk on that asset, but yet we're still able to collect credits each and every month right up until expiration day, when the long options that we own expire worthless. Now, we do this quite often. We have other positions like GameStop that has worked out. GameStop, by the way, is one that has completely paid for itself over and over again. We did almost the exact same position in GameStop where we bought puts and then we continue to sell puts against it. And not only did we pay the cost basis down to zero, but we have excess cash on the GameStop put, and we still have until January before the long position expires. So we're collecting right now risk-free cash each and every month on that position. Now, I may have gone a little bit overboard with the complexity of this, but please understand, if you're brand new to options or don't even know anything about options, come on over. We have a free membership that you can take advantage of for 2 weeks. There's no strings attached. I talk about this almost every week. We don't take credit cards or high pressure sell you or anything like that. You just come on, you sign up for the membership, you go through our videos, you soak it all in. You don't even have to place a trade. You could just learn. You could even go into our StickyTrades University and poke around with the educational videos there until you're able to really understand what's going on. You take it a little at a time. And then if you have questions, we have live webinars Monday, Wednesday, and Thursday where you can plug in and ask me questions live with the charts from that particular day. So we have it all packaged up for you, ready to go. It's a lot of fun. Yeah, I get people trying to tag me with the perma-bear label, right? I don't care. As long as I'm seeing bearish signals, I'm going to continue to play bearish positions. And even then, we do mix up our portfolio with bullish positions that will help us make money on the way up. So we more or less mix the bullish positions with the bearish positions. We trade options. We collect money each and every month, and we're having a great time. Do we lose money on trades? Absolutely we do. From time to time, like UNH, for instance, we lost on some put spreads. But the $7 right here that we took in on the Coinbase offset what many of our members lost on a $5 put spread, right? And then next month or next week, we'll sell more options to make up any of the smaller losses that we have realized already. So again, it's position trading. You're not going with just one position and hoping that it's going to go your way. No, the market's going to be volatile. You're going to put your positions on your trade blotter. You keep track of them. You ask questions. You follow along with our community. But this is what we do over here. It's a lot of fun. Now, tomorrow at 12 noon, Andrew Faldi, Andrew is another coach of ours, we are going to be presenting for 2 hours to the Silicon Valley Option Group. We're going to have a webinar. Now, I do not have the link here, but you could probably Google them and find out how to plug in. It's a 2-hour webinar talking about options, talking about how to automate your trades, talking about how to manage risk and how to simplify the process. So that is it. You have a great weekend, and I will talk to you on the next video. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.